Good morning, everybody. Welcome to today's live session. So we run these 3 days a week, normally Monday, Wednesday, Friday, and we look at the major markets, pound, euro, stock market indices, gold and oil, just to see what's going on, see what's moving and what to look out for. I'll just put the risk warning up. We're going to start off looking at the pound first of all today. Of course, we've got the European elections tomorrow for European members of the European Parliament. It's going to be really interesting because, I mean, I'm sure you know, UK politics is something of a mess at the moment. We did see a rally for the pound yesterday on a proposed, I think it was a leak that Theresa May, the Prime Minister in the UK, was going to offer MPs the chance to vote on whether we should have a second referendum on Brexit. So we saw the pound rally. And there's been a lot of opposition to that overnight, suggestions that maybe the Prime Minister is going to end up having to go a bit earlier than most people were expecting. But it looks like, well, I think the risk is at the moment that in these elections, the governing party in the UK, the Conservatives, may not even end up with one MEP. So we'll see. It's going to be interesting. So that's all starts tomorrow. And I think we have to wait till Sunday, I think, is when we have the results of that. So I think it's going to be an interesting few days. Just a quick plug before we get into everything. We're doing this promotion where if you open an account, I'm doing 30-minute sort of one-on-one trading strategy sessions over Skype. So if you don't have an account with us, if you go to Capital.com/David, open a real money trading account. Once complete, we'll be in touch to arrange a convenient time for the call. So that's that. Right, let's get into the markets. Apologies if I sound a bit croaky today. I think half the office has come down with a chest infection, so we're all a bit under the weather. Right, let's start off with the pound. So it's been relentless. You know, this slide now that's been going on. The latest bit of the slide has been happening really since the beginning of May. So May the 5th, the pound pushed up to 131.75. And we're currently trading at 126.65. And we were looking at these levels earlier this week. Let's just get rid of the RSI for now. So we've got the lows from here, from the 14th of Jan. And I think that was that vote, 15th of Jan. That was that vote. It was the first of the votes on the Brexit deals. And I know, you know, who can remember which one was which? Because we had so many. But that was the very first one. And the fact it didn't pass for a no-deal Brexit. We saw plenty of volatility on the day, and then we saw the pound recover. And now we're back here. You know, we are back to these old lows pretty much. And again, if it's going to bounce from anywhere, this is the place. But at the moment, the sell-off in the pound has been relentless. I am surprised by how far it's come. But then I suppose we're in a position now that none of us would have thought beginning of January, where nothing's any clearer as to what's actually happening. So we'll have a look at the short term in a minute. I suppose if you were really aggressive, you could be a buyer down here and just chuck a stop 50 points the other side or something. But I mean, it's very difficult to come up for a reason for buying the pound in the face of the weakness that we've seen. You know, we saw this big move, this really sharp move yesterday on that news of that Theresa May was going to offer potentially this second referendum. The market went from 126.85 to 128.13, so what, 150 point move in the space of a few hours, and it's given it all back and more. Okay, so we are yet again making new lows for this move lower. So for now, this market is still incredibly weak. We're pushing through. There we go, pushing through the lows from January. And you'd have to say, well, the risk is we're going to have a look at these lows from end of December, maybe even that odd sort of spiky low we saw right at the beginning of January. So I think, you know, 124, 125 for pound US dollar. We'll have a look at euro sterling in a minute, see what that looks like. There's somebody on YouTube from New York. Wow, must be, what time is it over there? 5 o'clock in the morning. Good morning. So it looks really weak. You know, it's difficult to see at the moment what's going to turn it around. Maybe if Theresa May resigned, maybe I think that would definitely shake things up if that happened a bit sooner than expected. But it's a market that's still very, very weak. Let's go back to the hourlies I mean, what levels do we need to break? If we look at things like RSIs, actually, if we go back to the dailies first of all, the RSI is incredibly oversold. But the problem is, this is, I think, when you first start trading, there's a real temptation to load your charts up with RSIs, MACDs, stochastics, all this sort of stuff, and they have their place. But this is the problem: when we have a strong trending market like this, the RSI has been oversold since about 128.50, and the market has moved 200 points lower again. So I don't think there's too much to be taken from the RSI there. If we flick it over to the hourlies, if we were going to pick up on a trend here, what are we looking at? We're looking at probably the trend off the highs looks something like that. Even yesterday's sharp rally did nothing to threaten that trend that's been in place for almost 3 weeks now. So I think at the very least we need to see it moving through at least 128.50, probably even higher. So for now, it's a market that's still under pressure. I think if it starts to turn around, if we do start to see strength back, we're not going to see it gain 500 points overnight. Famous last words. So I think if you're there waiting for the turn in the pound, sitting on your hands is not a bad idea here, because I do not think we're going to see it rocketing away, given just the severity of this sell-off. Okay, so let's see what happens the next couple of days, but still very weak. Still, just politically, it's all a bit broken, it feels, in the UK at the moment, and clearly that's not helping sentiment towards the pound. Let's take a look at euro sterling. We haven't looked at that one for a while, so let's just have a quick pick up on that. So not surprisingly, given the pound's weakness, we are seeing a bit of a run for the euro through May. So beginning of May, €1 was worth 85p, and now it's worth 88p. So we've seen 300-point move for euro sterling so far this month. What's interesting, I think, look on the dailies here, look how it overbought this thing is. So this is the most overbought the euro's been against the pound since last summer, and this pretty much marked the top, actually, up at 91. So I think what's going to be interesting, we'll have a look at euro dollar in a minute, but what's going to be interesting, and this was clearly a problem area, let's call it 88.50. So 88.50 to 88.70, these were the old highs for the euro against the pound back in Jan, towards the end of Jan this year. So whilst it is still strong, maybe we will see some euro sellers starting to creep in. Maybe these European elections end up being something of a catalyst for restoring some positive sentiment to the pound and putting a bit of pressure on euro sterling, and we see it slide off again. Let's see, but I think it's very interesting up here. If we're going to expect it to run out of steam, we're pretty much there. So we'll come back to this on Friday and see how things are faring. And finally, we'll look at euro US dollar. Then we'll get into other markets. I think it's been a really strange time in euro dollar. Considering that this is the most traded foreign exchange pair in the real market, in the world's FX markets, euro against dollar. It's the volatility has been, I'm not going to say non-existent, but it's been just fairly quiet trading for what feels like months now. The euro has been losing ground since April last year, or February last year, sorry. So we're 15 months in to this slide for the euro against the dollar. It accelerated May and into the summer, saw a bounce back, and since then we've just had this drift, this gradual drift in euro against the dollar, and that hasn't changed. I think I've said this a few times, I still think that maybe in the latter half of this year we could be talking about a euro recovery. So I think for me it's a market to watch from a longer term point of view to see if the strength comes back, but it's not there yet. It keeps slipping to these new lows, but then it doesn't follow through. It snaps back, but it doesn't snap back enough to take out any previous major highs. So for me, if euro dollar made a move through sort of 113.25, then maybe we're going to get a more sustainable recovery. But at the moment, it just blips up 100 points or so and then sells off again. I suppose if you wanted to be, really aggressive in the short term, that's the low for the year so far, and it's a multi-year low at 1 111 near enough. The market's 111.63 at the moment, so we're 60 points above that level. I suppose the aggressive trade again is to be a buyer looking for it to push up maybe towards 113 with stops the other side of that low for the year. But given the lack of volatility, I don't think it's the most exciting market in the world at the moment, but maybe if it starts to get a move on in the second half of the year, it starts to look a bit more interesting. Let's take a look at oil and gold now. On on Monday, we were looking at oil because it had gapped higher. It had gapped higher over the weekend. Let's just show the gap on Monday. Oh, there we go. So in Asian trade, on Sunday night, so it was about 10 o'clock UK time when the markets reopen again, we saw oil open up at about $63.50 a barrel, and that was after closing at about $62.80 a barrel. So it gapped up 70 cents higher on Sunday night. And I was saying then, I think the opportunity is, if it pulls back, does it hold above the lows? And does it squeeze higher? And we did get that. I must admit, wouldn't expect it to tail off again. But looking at this move on Monday, we did get it sort of pushing back, a bit of a false break below Friday's highs, and the market pushed about $1 higher. But since then, it's giving it up and it's just breaking. It's just breaking lower. So it's really running out of steam again, because I thought maybe we'll get a push up here and we'll break through those Sunday opening highs, but it just hasn't. So it looks, I suppose the best way of saying it, it looks a bit non-committal at the moment, the oil price. I'd still be tempted to be a buyer rather than a seller. We've rallied up from these lows in December. We've fallen out of the uptrend, sold off a bit, but haven't really broken any major lows on the way down. So I think, again, I don't think there's a trade there at the moment. Not for me anyway. I suppose the aggressive trade here, and I think it's interesting that I keep talking about aggressive trades, because I don't think there's any really obvious trades. The aggressive trade is to treat the move this morning through these 62.60 lows as a false break. So the aggressive trade would be to be a buyer and put a stop loss at maybe 62.20 or something, looking for it to push back into the range. But I think maybe the better trade, because we have oil inventories this afternoon, is to see where the market is after the inventories. I think for me, clearly, if we get a push back to the low 60s, that looks like a great opportunity, because this really has held the market up all through May. But we had this breakout, we had this strong opening on Sunday, and it's just faded since then. So it's just giving it up since then, losing momentum. The gold price is slipping as well. All of these markets, gold again is one of these that a week ago it looked really strong. Let's flip this over to a daily. Not really strong. It looked like it was finally breaking out of this correction from February. Let's pick up on that. So there we go. There's our trend from August last year that we've been banging on about quite a bit in these things. And then since February of this year, we've had this looking like that. And last week, that move up to 1300 and through 1300 on gold, it looked like finally the price of gold was getting a move on. We were back above 1300, and hopefully it can build on this and target a much bigger recovery. But it wasn't to be. So we've come all the way back down here, down to 1273. We're back to where we were beginning of May. And I suppose, do you know what? Actually, looking at it, I think this is probably the most obvious trade that I've seen so far today. If the gold price is going to recover from anywhere, then we're here. So I think these lows for the year, 1265 lows, is the big level for gold. I think if gold starts losing 1260, 1265, it looks as if this recovery from August last year is over, and the risk is that we're going to sell off. So I think down at these levels, this is where we need to see the strength coming in. It's been a pretty quiet couple of days, but this is, I think, it's maybe not as clear on the hourly. I think the daily chart's the better one here. Here we go. So it's these old lows from back here, 1266, 1265. if it's going to rally, this is the place it needs to start moving from. So let's see what happens. But yeah, drifting back to the trend line, and really, if that trend's going to hold, you'd expect the price of gold to start moving higher. US stock market indices. Let's do that. So I think, again, it's been a bit scrappy this week. There've been opportunities, but I think I find it a bit harder work than normal. But let's just look at where we are. This is the S&P 500. So this, for me, I think if you're going to trade US indices, I know everyone likes the Dow, but I think the S&P, as I've said a few times, good markets, a good market, because you get plenty of volatility, tight spreads, all that sort of stuff. So this is where we are on the S&P. So we had this run up from the lows in December, massive recovery this year, hits fresh all-time highs, end of April, beginning of May, corrects a bit. And the last sort of week and a half, it's all, again, a little bit inconclusive. I mean, look at this week. You know, we've just had chop. We've just had sideways markets this week in the S&P. You know, so again, I think it's a pretty difficult one to call. Clearly, down at these levels on the daily chart, 2785 through to 2800, big support. So any weakness back down to there, to me, looks like a good buying opportunity for a medium-term swing. If it starts breaking below there, we have to start worrying about a deeper sell-off. But for me now, this all still looks pretty positive. This is really the week so far, or last week. We had this recovery that was chugging along. It fell out of the recovery. There was a little opportunity on Friday afternoon. I ended up getting, not Friday afternoon, Monday. I did end up trying to buy in the beginning here, got stopped out. And then the market, if I just zoom back in, the market at about 7 o'clock UK time on Monday came back to the lows from earlier in the session. So that looked like an interesting opportunity. So that was a low risk trade there. So got on that, and the market has pushed higher. But again, it's just been a little bit sideways over the last 24 hours. So going into this afternoon, you know, I think the tilt for stock markets is still positive. So if we were to see a sell-off, I'd still be looking for a buying opportunity. And I think the obvious levels to look at, let's just flip this to a 5-minute chart. And it looks like we've tested it already. It's the lows from yesterday. So here's about 1:30 yesterday. So the official open around about 28.57. Let's call it 28.55, these lows down here. The market has, the S&P has pushed down to sort of 28.55 overnight and bounced back. So I think for short-term traders, that would be the level to watch going into this afternoon to see if yesterday's lows hold. But I think it is still positive, even though we've had a little bit of a boring week this week. Let's take a look at the Dow. I'm going to guess it's the same sort of thing on the Dow. Let's bring up the daily chart on the Dow. Here we go. Again, you know, even more. Just sideways. You know, you can see these are the daily candles. We've got 1, 2, 3, 4, 5. There we go. We've not really moved in 5 days. Just trading pretty sideways, really. And there's the little bump higher we've been having in this week, but we're trading pretty much where we were on the 16th of May. But again, for the Dow, if we saw it under pressure this afternoon, I'd be watching the lows from yesterday around about, what, 25,770, that sort of area. So about 70 points below where we are now. So a little bit boring in the US. Let's take a look at the DAX. There's our DAX. So the DAX, again, the recovery for this year, the daily chart for this year, the market's been pushing higher. We've had that correction since May that we had in US markets. And again, we're just all a little bit sideways so far this week for the DAX. And I mean, what can you do? I mean, that's yesterday's trading. So the lows for yesterday, I mean, that looks incredibly boring day yesterday. So the market traded as low as 12,108. That is a very dull day for the DAX. Traded as high as 12,175. So we had, what, a 70-point range for the DAX yesterday. So it's a really quiet day. So far today, it has had a little look at the lows at 7 o'clock this morning. It's pushed a bit higher. Maybe we see a bit of nerves coming in up here because it's the highs for the day. But it's again, it's all a bit sideways. Someone's saying they trade the E-mini futures. It's a good market, I think, the S&P, isn't it? That is, and there's those macro E-minis that were launched as well. Wasn't there about a week ago? So there we go. I think, to be honest, you know what? I think this is one of the dullest market updates we've done for a while, because everything just looks a little bit inconclusive. I think apart from, well, we got the pound that's just hurtling lower and continuing to hurtle lower. But maybe if we have some political changes, perhaps things will change there. And gold is I think the most interesting one, you know, because we're back to these levels. Okay, so if we viewed this as a valid breakout and a pullback, then bang, we should be going up from here. So I think that's maybe the more interesting market to watch. We do have oil inventories out this afternoon at 3:30 as usual. So we could see some volatility. You'd expect in the oil price this afternoon. We'll see how that is. Oh, and then I think it's going to be, do we see much volatility for currencies, for the euro and the pound over these elections? And I don't think we will. But what's interesting, of course, is the fact the results are out on Sunday, I think. So if we find out on Sunday, Asian markets are closed obviously on Sunday, but they reopen at 9 o'clock Sunday night. So I think we could have quite a volatile opening, depending on how these EU elections go on Sunday night for FX. So let's see what happens. I'll just jump in and answer any questions. Someone's asking about Microsoft and AMD. Let's have a quick look at that. Microsoft and here's Microsoft. That had been pushing higher, hadn't it? Let's have a quick look at the bigger picture. There we go. So we'd seen, I think, I remember looking at this in the past. It's had a great run, Microsoft, in recent years. You know, it was sideways and boring for a long time, but really started moving from 2016, from about $60. I was going to say $60 a barrel, $60 a share for Microsoft. It's doubled since then, and for me, you'd have to say it's still positive. You know, clearly it's we're seeing a comparison with what the broader US markets are doing, pushing out, correcting, and bang, we're here. But for me, you still want to be a buyer of Microsoft. And the only question would be, well, where, as ever for me, where would your stop loss go? The absolute closest I would want it, if I was buying in, is below these lows from earlier in May. So the lows around about 123. But arguably for me, a better one is back below these 116 lows from late March, because it also ties in with October highs. So that's giving it a bit more room. But I think clearly that trend is still up, clearly still all positive. And then AMD is the other one requested. Let's have a look at that. AMD, what do they do? I never know. Oh, advanced micro devices, of course. I don't know. What do you think? I think that is a difficult one to call. I think the hindsight trade here, the interesting hindsight trade. I mean, clearly the trend was up, running from March to September last year. We had this correction, broke out the correction, came back to retest the old lows back in December. That was an interesting opportunity. So we've pushed up since then, but again, it looks like it's losing a little bit of momentum, doesn't it? So I'd still arguably be a buyer rather than a seller, but it's really gone nowhere for the last 6 or 7 weeks or so. So I think it gets to be a bit more interesting if maybe we see a deeper sell-off, maybe towards 2250, that sort of level, then maybe it gets a bit more interesting. So you're saying blah blah blah, Intel's hyper-threading architecture of security risks. This is surely good news for AMD. I'll take your word on that, but I'd also say it's not being reflected in the market at the moment. So clearly, if that news is out there, we're not seeing the reaction from the share price. So I don't know. It's clearly, if news is out in the public domain, a lot of this news will get discounted into the market price, and we're not seeing that much excitement for the AMD price over the last month. But I would still say it's still positive. But perhaps we need a bit of a deeper sell-off to have a better trading opportunity from here. And one last one, we'll look at Tesla. I didn't see them yesterday. I didn't bother looking yesterday, but it looks like again losing a little bit of ground yesterday. Not much. Okay, they opened a bit lower. and they recovered a bit. You know, I do think, you know, it's down on its worst levels since 2016, Tesla. So we're on nearly 2.5-year lows for the Tesla share price. You know, I think the opportunity here is, if we get a rally back up to 250, is to sell short. I think that is the opportunity, because we've had this great trend looking something like that. So I think, and we've had this break to new lows. If we can push back up and it starts to weaken, I think that's maybe where the opportunity is in Tesla. But let's see. We'll keep coming back to it. Right, we'll wrap things up there. Apologies for the slightly croaky throat today. If you've got any questions after watching this, just leave a comment on the YouTube video. I do check back to see if there's any questions. You can email me, david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets for updates and stuff. We'll do this all again on Friday. I think maybe we'll have a quiet couple of days because of these EU elections, but definitely Sunday night, 9 o'clock, when FX markets open, I think it's going to be really interesting again. But maybe the price we pay for that is having a boring couple of days. But let's see where we are on Friday. So we'll come back and do it all again then. Thanks for coming along, and hopefully see you at the end of the week.